Welcome to Market Makers. Today on the show, we have Mr. Devender Singhal, Fund Manager and EVP at Kotak Mutual Fund. Devender is a veteran in equity research and fund management and has been in the industry for over 2 decades. Welcome, Devender.
Hi, Milan.
Pleasure to have you on the show.
Thank you. Pleasure's mine.
Thank you. So, Kotak Mutual Fund is launching an NFO, a new fund offer. It is an open-ended equity scheme following the consumption theme. It will be investing in companies engaged in consumption and consumption-related activities. So, Devendra, let's start with some fundamental questions. So, first question, what comes to my mind is this the right time to invest in consumption-led companies?
Milan, first of all, thank you so much for giving us an opportunity to interact with 10 million users of yours. Your question on consumption is that I would say that there's never a right time, or there's always a right time for the consumption fund to be looked at by the investors. And why do I say so? Consumption is an evergreen theme. We always keep consuming one thing or the other. The category of consumption keeps changing, but consumption always happens. So as a theme, it is an evergreen theme. And we have seen over the period of time that this is one aspect of the market which basically sees a structural growth happening. All others are also there, but this is something very, very non-cyclical in nature and structural in nature versus many other themes in the market, which are sometimes a short cycle or a long cycle, but they have cycles therein. In consumption, we typically see a structural growth happening. And that is why if you have to have one fund or one theme, which should always be part of your portfolio, it is the consumption theme. Having said that, I am happy to share that, today as a country, we are crossed $2,000 per capita in terms of GDP, right? And this is a level whereby if we look at the data across other markets and other geographies, there is the data when this is the level of the income at which the discretionary consumption starts kicking in a major way. So yes, I think it is time for consumption fund in India for sure.
Interesting. And can you briefly define the investment universe you would have for this fund?
Sure. So it's a very, very wide universe, Milan. If you look at the benchmark itself, which we have chosen as a Nifty Consumption India Index, that has around 38% weightage to the FMCG or the companies which are engaging in household products, personal care, and so much. There's another 14% weightage to the consumer durables, another 8% weightage to consumer services like retail, hotels, and so much so on. Besides that, 20% weightage is to auto and auto companies, which are there in the auto and auto component space, and another 10% in telecom space. On top of that, another 10% is spread across healthcare, real estate, and other services therein. So it's a pretty wide index to that extent therein, and it covers pretty much most of the entities which are directly B2C is what we say, right? Business to consumer. Wherever the direct involvement of the consumer comes in, that most of the companies in that space would come into this field.
Got it. And for this fund, what would be your stock selection process, your overall investment strategy?
It would be the usual criteria which we use in all our funds across, which is the BMV approach. For the users who are use BMV approach, it is business, how good the business is, followed by management, how good the management is and its ability to take the business forward, how clean the management is, and the corporate governance, and then the valuation. The valuation methodology we choose for this fund specifically is growth at reasonable price. This suits very well for the consumption universe. In fact, this is the valuation methodology which we use at Kotak for most of our securities therein. But within the consumption sector, this fits really well. Now, reason being that in the consumption space, unless and until you see the growth, the valuation basically doesn't come. So it may keep languishing unless and until the growth visibility in there in these stocks. So growth is very, very sacrosanct, which has to be there in these names. and then valuation at growth at reasonable price. So we don't mind them buying a bit expensive, but the growth has to be therein. So if you have the growth and then reasonable valuation, that is a sone pe suhaga.
Interesting. And I like the framework BMV, that is business management and valuation. In fact, that could be one of the key takeaway for retail investors as well when they do their individual stock picking. So, and taking the discussion further, what would be typical advantages of investing in consumption related companies compared to other companies? Would they have better margins or better return ratios?
So, Megan, you're right. Consumption companies, the consumption theme companies, if you look at the Nifty consumption index as such, the return on equity for that index is better than all the other indexes which Nifty maintains, the sectoral indices which Nifty maintains, barring the Nifty IT, which has a slightly better return on equity profile which the consumption universe has. So yes, most of these companies are very, very capital efficient, and they give out very large payouts in terms of the overall earnings they do. They have a very high asset turnovers, so the requirement of capital is also very less. So you would hardly see most of these companies coming to the market to raise more money. So as such, it is basically fewer and fewer stocks which is being chased by the investors, and that also is leading to a slightly higher valuation in this kind of a theme which is being there because of the following factors. Very high return ratios, very high payouts, and very less need for capital. Whatever is being needed is generated through internal accruals therein. So that is where these companies also are at a premium to the overall market most of the time.
Got it. So there is an inherent, efficiency built in these companies.
Yes.
Got it. And what is your view on shift towards, the organized sector?
So that is a big structural driver to this entire theme. India, we are increasingly seeing that the bigger and the bigger companies are basically gaining the market share from the local or the unorganized players. And this state has actually got accelerated. The shift has got accelerated post GST. So post GST, it is becoming increasingly difficult for the unorganized segment to participate, and the advantages which the companies have had in terms of the tax avoidance earlier, that has got receded. So the shift towards organized is actually leading to a slightly better growth rates for the larger players than what was historically, at least pre GST regime.
So apart from this, what are other key macro themes from which the fund can benefit from?
So, Milan, we have defined this as a trinity which is driving the consumption in the Indian economy. It is structural, cultural, and digital factors. When we talk about structural factors, it is the increase in per capita income, which we are now cost $2,000 per level. It is the increasing working age population of the country. As you may be aware, that of the 143 crores population, almost 100 crore population, or 68%, is now in the working age. This also leads to a very, very large push towards the way we consume in the country. The third structural driver is the increased share of the organized market. With unorganized paving way for the organized, this is also leading to better growth for the consumption within the Indian economy. When we talk about the cultural factors, it is the nuclearization of the families and the increasing aspirations of the families therein. Another trend which is catching up and is leading to a more and better consumption is the urbanization. People are shifting from villages to the towns, and even within the towns, the spread is increasing and it's reaching nearer to the villages, which is leading to a very, very marked shift in the way the overall consumption is being happening. Third, but not the least, is the digital drivers. The increase in online shopping is not only leading to a further expansion of the consumption bucket to the hinterlands, it is also leading to a very, very different way people consume. What used to be getting stuff in hordes, now it is buying on the go, and the online deliveries are basically really changing the entire way the Indian consumer is shopping nowadays.
Interesting. And we are seeing currently that host of IPOs are coming. So will the fund be investing in IPOs?
Yeah, so if any stock which is there within the consumption theme and is coming for a fresh offering on IPO, we would be open to looking at that as well in this fund.
Okay. And
But
while
it's
everybody talks about returns, the other side of the coin is risk. So, how do you plan to manage risk in this fund, and how do you take care of drawdowns?
in fact, Milan, glad you asked this question. In fact, the consumption as a sector, or if you look at the returns of this consumption index, which Nifty has, and you compare it over the last 20 years, this sector is the one which has the lowest drawdowns versus the overall market, specifically when there are external shocks happening. So, for example, in 2008, when the entire market went down, the Nifty went down by almost 60%. The consumption index only went down by 52%. And the bounce back was even better therein. Same happened during COVID times. Market went down, the consumption index went down less than what the overall market did. So to that extent, the resilience of the sector is very, very high versus the overall market. So the drawdowns also are pretty lower. So this also basically adds that one of the reasons why investors should look at consumption as a segment favorably when they basically look at constructing their portfolio.
Interesting. And finally, would you like to share some key details about the NFO?
Yes, so the NFO is starting, which is October 25, and the issue is open till November 8. Uh, it would be open for subsequent purchases post the NFO closing period also. So investors who are looking at investing through the NFO route are open to participate in this window. Otherwise, as and when the NFO gets open, it would be open for purchases on a daily basis as it is open-ended scheme. We have also seen that in the within the consumption index, if you participate on a SIP basis also, that has made a lot of sense. And the investors who have basically seen the returns in the consumption index, the returns are even better within the consumption universe, the index versus the overall market therein over a longer periods there. So we do ask investors to look at this theme in their portfolio as a top up to the core holdings. And we do think that the way the Indian market is poised, we would see that consumption as a theme should do better over the coming years therein.
Interesting. Thank you, Devender. Thank you so much for taking out time for this discussion. It was a pleasure having you on the show.
Thank you, Milan. Thank you so much.
All the best for your fund.
Thank you.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.